The performance of your global value fund in 2010 second quarter, how has it been?
I would say obviously we suffered like the rest of the market. There's been a lot of turmoil on the back of the fuss with the euro. If you look into last quarter, we ended up around roughly around 11%. Now we are year to date, and now the performance is around 8.4. Looking on the relative basis, how we do compared to a benchmark actually looks better. So we actually outperformed the benchmark in the period. In first quarter we were roughly 1.5% in front of benchmark. It's roughly around 3% now. So it's been hard, a lot of turmoil, but on a relative basis we actually outperformed the benchmark.
After first quarter we talked about the crisis in Greece. Has the crisis in Greece developed to a euro crisis?
I must say there's a lot of uncertainty in the market, and it's also affected our fund. There's the European part. We are big in European exposure, but you can say the ironic part is that looking at the European part of our portfolio, it's actually the one part that's performed the best in the quarter. If we recall from after first quarter, I think our European carve-out representing the European part of our global fund was roughly up 6.2%. It's ended up after second quarter up 5.5%, and obviously did better than you can say the general markets. So it's obviously nice as a value investor talking about these strong balance sheets and all the things we're saying that's going to make a difference in the future. Strong balance sheets, improving track record earnings. We're seeing signs of this actually is happening as we speak.
But it seems like the markets they are quite nervous for the time being. Is it also affecting your value shares?
Obviously, as I mentioned before, it's affecting our value shares, and on the other hand, you can say there's a lot of uncertainty in the market right now, and it creates opportunity on one side. There's more cheap stocks to be found, and also as I stressed before, actually it seems like the value effects are kicking in somehow with the strong balance sheets and the proven track record earnings, and in that respect we're quite optimistic, even though we are saying this on the back of a quarter with a lot of turmoil.
If you should point out the most important factors that has driven your results, what would that be?
Again, we are in this deleveraging phase, and we think we are coming into the second part of this. We had the relief rally, with you can say where the market came up on the back of saying this is not the end of the world, and there was a lot of funds flowing to save companies. Now it's about deleveraging. It's about which companies are master in their own house, which companies have the proven track record of earnings, and obviously this is affecting our stocks going forward, and this is going to be a general theme for us.
We have also talked about M&A activities earlier. Are they also affecting the shares?
M&A, as we mentioned in earlier interviews, is one of the keys to come out of this crisis, and we saw in the past years that M&A activity more or less came to a standstill in our part of the world, Europe and the US. One trend that was actually new was that this was actually increasing the activity in Japan. So in the past 3 years. So M&A is definitely important for you can say our performance going forward, and we see slight signs of this improving also as we speak. One thing we have to remember when we talk about M&A tends to be a lot of focus on the A in this, and talking about Japan as I just did, that tends to be, you can say, it's more the M than the A actually active in that respect, and we've seen big mergers in Japan also in the financial sector, for instance, but also recently we saw actually acquisitions by outsiders, you can say foreigners actually buying companies in Japan, and that's sort of new.
If we're looking into your portfolio, do you have any interesting news from the portfolio?
I would say there's a lot of interesting news. One of the most interesting news in general would be that earnings are actually doing okay in the companies, actually better than what you would anticipate, and also what the analysts were expecting. So that's a good sign. Talking about single companies and give an example of a stock that did very well for us. Recently we sold off AGCO, US-based, Georgia-based agricultural company, which is into farm machinery like tractors and so on. They are the producers of the well-known tractor, well-known Ferguson well-known brand in tractors. This is a company that on the stock exchange, looking at the share price, was in a bubble with all these the fuss about soft commodities. You had the soft commodity bubble on the back of all these biofuel stories and all this stuff. And this bubble obviously came to an end and it imploded. And the share price came down sharply. And in this process, we actually started buying the stock around $18. And recently, in 2010, we actually sold it off at $33 where it made its target. And this is a classic value stock where I can say there's been a lot of hype about the company, a lot of, you can say, very prosperous growth analysis about this company. All of a sudden, this bubble punctures, and the company is treated like there's no day tomorrow. And obviously, the company hasn't lost its long-term earnings power, and that's what we profited from.
If we look ahead, is there a new day tomorrow? How does the future look?
I would say for there's going to be a lot of uncertainty going forward, and deleveraging, I mentioned it several times, is the name of the game. There's no shortcuts in deleveraging. It's a painful process, and I mentioned it goes for persons, it goes for companies, it goes for countries now. But on the other hand, you can say from a value perspective, we are based with a portfolio of very strong, financially solid companies, strong balance sheets, with a proven track record earnings. So we're actually quite optimistic for the outlooks where we are positioned in the market.
So are you optimistic or pessimistic?
I would say I'm slightly optimistic, and I still say, I stressed this before, there's lots of uncertainty, but at the end of the day, there's going to be consolidation. I think we are in a position to actually prosper with the value stocks in the coming years.